Today, I'm sharing 3 of the most common accounting mistakes I see nonprofits make every day. I'm curious, is one of these happening to you? Hi, I'm Teresa Clark, and I'm a seasoned CPA with over 30 years of experience serving 501c3 nonprofits. I've experienced both as an external CPA doing audits and an internal CFO to organizations. And I'm here to serve you. So you can learn more by going to teresaclark.com. Running a nonprofit means more than just doing good work. It means proving to donors, regulators, and the public that you're trustworthy, that you're being a good steward of the resources you've been given. That trust rests on your ability to manage your finances with transparency and responsibility. But even well-managed nonprofits can fall into accounting traps that damage their credibility, erode donor confidence, and even could jeopardize your tax-exempt status. So today, let's walk through 3 of the most common nonprofit accounting mistakes and why avoiding them is a key to maintaining your accountability and fulfilling your mission. Mistake number 1, inaccurate or incomplete financial records. At first, messy books might seem like an internal problem, but think about what happens when a donor asks how their restricted gift was spent and you can't give a clear answer because your records are incomplete. Or imagine preparing your annual Form 990 only to discover that the key numbers don't add up. That's going to trigger questions from the IRS and from the state regulators. Incomplete or inaccurate records don't just make reporting difficult, they send a message that your organization isn't serious about managing money well. And in a world of nonprofit stewardship, that can have lasting consequences, from damaged relationship with funders to various penalties. Mistake number 2 is lack of segregation of duties. In a smaller organization, it's common for one person to wear way too many hats. Maybe the same person deposits donations and also records transactions and reconciles the bank account. You say, what's the problem with this? Well, without checks and balances, it's all too easy for errors and worse, fraud. Yes, I said the F word, to slip through unnoticed. For example, I've seen organizations discover months or even years later that funds were misused or misapplied simply because no one else was involved in the accounting. These situations can not only cost you money, but they're going to destroy the trust of donors and those who fund you. They expect rigorous oversight. If you need some help separating financial duties on a small team, I want to invite you to check out the playlist linked up in the corner right now. This is a link that will take you to a description of my video series called Internal Controls for Small Nonprofits. Mistake number 3 is operating without a clear, or I would say living, budget. Many nonprofits create a budget once a year and then they tuck it away on a shelf, they shove it in a drawer. But without regular review and adjustment, that budget stops reflecting reality. It stops being a helpful tool. This can lead to overspending in one area, underfunding a critical program, or maybe finding yourself in a cash flow crisis because you didn't have a clear plan. And when donors or board members ask hard questions about how your resources are being used, you're going to be standing there without answers. Failing to plan isn't just a management issue. It's actually a failure of stewardship. It risks your credibility with your funders and your ability to deliver your mission. For more on budgeting, check out the banner up in the corner and the link in the description for my recent playlist on nonprofit budgeting. So here's the solution: strengthen your stewardship with expertise. So how do you protect your organization from these accounting pitfalls while staying focused on your mission? Well, maybe what you need is a fractional CFO. Those are the services we provide. And a fractional CFO gives your nonprofit access to high-level financial expertise without the cost of a full-time staff member. We build the systems that ensure your records are accurate, complete, and audit ready. We help design and be a part of the internal controls so duties are properly segregated and risk is reduced. We create dynamic budgets and provide regular financial review so you can plan with confidence and demonstrate true accountability to your donors. In short, a fractional CFO helps you turn good intentions into rock-solid financial practices that uphold the highest standards of transparency and trust. If your nonprofit is ready to strengthen its financial foundation and avoid these common mistakes, let's talk. You can schedule a consultation with me at teresaclark.com, and you can see how fractional CFO services can help protect your mission. If you found this video valuable, hit the like button and consider subscribing to help get our weekly videos full of practical nonprofit finances delivered to you. I look forward to serving you.